Hey everyone, and welcome back to the channel. Let's dive right into the latest movements in the gold market, because it's been a fascinating few days. We're seeing gold prices take a bit of a tumble, and there are a couple of key reasons for this. First off, there's a growing sense of optimism surrounding the peace talks related to the situation in Ukraine. Whenever geopolitical tensions start to ease even slightly, the demand for safe haven assets like gold tends to decrease. Investors feel a bit more confident stepping back into riskier assets, and that puts pressure on the gold price. On top of that, we're likely seeing a classic case of profit-taking. Gold has had a pretty strong run, and when prices are high, it's natural for traders to want to lock in their gains. They sell off some of their holdings, which adds to the downward pressure on the market. So, a combination of easing global tensions and investors cashing out is what's behind this current dip. But does this mean it's all downhill for gold from here? Not so fast. There's a major factor that could put a floor under the gold price, and that's the U.S. Federal Reserve. The Fed recently delivered its third interest rate cut of the year. Now, why is this so important for gold? Well, lower interest rates reduce what we call the opportunity cost of holding gold. Think about it this way. Gold doesn't pay you any interest or dividends. So when interest rates on other assets like bonds are high, holding gold becomes less attractive because you're missing out on that guaranteed income. But when interest rates fall, the income you're sacrificing by holding gold is much smaller. This makes the non-yielding yellow metal a more appealing asset to have in your portfolio. What's more, the Fed has also signaled that we might see another rate reduction in 2026. This forward guidance suggests that the low interest rate environment could be here to stay for a while, which is generally a very supportive backdrop for gold prices. So we have this interesting tug-of-war playing out. On one side, the optimism around the peace talks is capping gold's potential upside by reducing its safe haven appeal. But on the other side, the Federal Reserve's dovish stance and lower interest rates are providing strong underlying support, limiting how far the price can fall. It's a delicate balance right now. The market is weighing the immediate geopolitical news against the longer-term monetary policy outlook. We'll be watching closely to see which of these powerful forces wins out in the coming weeks. That's all for this update. If you found this breakdown helpful, be sure to hit that like button and subscribe for more market analysis. Thanks for watching, and I'll see you in the next video.